Good morning everyone and welcome to another RF Crypto video. Today's markets have seen a lateral movement of about 0.35% and we have seen the market stabilizing to between 1.2 and 1.3 trillion in terms of market cap this weekend after a massive bloodbath in the crypto industry. We saw decreases in the price of Bitcoin from 45,000 to about 27,000, massive losses at almost 50%. Some altcoins even went as low as 70-80%, and some of these coins actually stopped trading, such as Terra's Luna, and the stablecoin UST also got delisted from exchanges and is now trading at 0.18 to the dollar. So it's essentially been permanently depegged. The general market is a mix of red and green, but all in all, the trend is downwards in the last 7 days. As you can see here, Bitcoin is down by 11%, Ethereum by 18%, Solana is down by about 30%, Cardano by 20%. It's now at a point where it has stabilized and the markets are moving laterally. It has found a point of maybe max pain or mid pain. We don't know if the prices are going to go lower again if any sort of bad news comes along. But at the moment, traders are being very wary. They're being quite careful and they're treading the needle to see what the best next step will be. Looking at the Bitcoin chart and its relative price, we see that Bitcoin dropped all the way down to about 25,425 before making steady recoveries. Now it is trading at this band of between 27,500, the support level, and 30,000, which is the resistance level. Yesterday it briefly broke this resistance level and it was heading up to the 31,500 resistance level. However, quickly the bears got back into the market, pushed the prices, and now it is below 30,000 once again. Now it's trading between 27.5 and 30,000, and we have to see how the markets react, because if you look at the last week or so, the markets have been trading laterally. Obviously the prices fell drastically from 30,000 to 25,000. However, the recoveries were quite quick and we now have found a nice rhythm to the price of Bitcoin and the general market itself. On some positive news, the UK's Treasury is already en route to legalizing stablecoins, even though we are still fresh out of Terra UST's crash. So the Department of Treasury has reportedly decided to go ahead with regulating stablecoins as actual legal tender. And it is quite shocking that it's so close to Terra USD's collapse. However, most of the crypto community is in agreement that this is a positive step, and regulation for stablecoins is a good thing, because by regulating it, it will prevent something like the UST collapse from happening, and it will prevent a lot of people from losing their money, some even their life savings. And also, while the recent crash of the Terra ecosystem, which saw an unrecoverable downfall of Luna and UST, was expected to raise red flags among the regulators, the UK Treasury maintains its course to ensure that UK financial services industry is always at the forefront of technology and innovation. And they're planning to tackle this by not making the same mistakes that could lead to UST. They're going to outright ban algorithmic stablecoins, which UST is one of them, that is basically not backed by anything. And they're only going to allow one-to-one fully backed stablecoins like Tether and USDC. And how one-to-one fully backed stablecoins work is, for every USDT that is minted by Tether and put into the market, Tether has to buy $1 worth of asset and place it in their treasury. So if they have $70 billion in market cap, they have to have $70 billion of any liquid assets to back the amount that is in the market. And that's how it remains stable, and that's how we prevent a collapse of stablecoins like how it happened in UST. We have now seen that algorithmic stablecoins are not the solution. We need one-to-one fully backed stablecoins. And obviously UK wants to legalize stablecoin because they want to open up new growth opportunities, and a lot of money is going to flow in to the country because a lot of crypto projects use stablecoins for their reserves, use stablecoins for investments, and use stablecoins, let's say, to pay their employees or to pay suppliers. That means that a lot of this money will flow into the UK. A lot of these companies will be incentivized to go to the UK and do business in the UK. But at the same time, if you have regulations, it ensures that stablecoins work in a way that provides financial stability, but at the same time, it allows the companies to work in a conducive manner. On other news, Goldman Sachs and Barclays invest in UK crypto trading platform Elwood. And despite the fact that we have seen a bloodbath in the crypto market and the fact that cryptocurrency prices have stumbled so much, we are seeing increased institutional interest in blockchain technology and in crypto. So we have Goldman Sachs, we have Barclays, we have Commerzbank from Germany, which is very, very crypto friendly, and we have crypto investment managers Galaxy Digital and Dawn Capital. This fundraising round is valued at 500 million, and Elwood has basically said that it's betting that traditional financial institutions like hedge funds and banks will still be interested in investing in cryptocurrencies. Institutional investors aren't looking for a quick buck. They're not looking to make returns within a day, within a month, or even within a year. They're actually investing in infrastructure. They're actually investing in technology that will bring change to the world, obviously making it more efficient. Obviously, integrating blockchain into the global financial system is a good thing. And these big companies know it, and they know that it's the future. And they're investing in the companies instead of actually investing in cryptos, because as I said on my Friday video, blockchain is a lot more than cryptocurrencies. It is a technology that has the potential to change the world for the better. And it's not the first time that Goldman Sachs ventures into crypto. This investment bank was the first to offer a loan backed by Bitcoin to crypto exchange Coinbase in early May. It has long seen an interest in the space, and even referring to digital assets and the metaverse as megatrends, which means that it's going to blow up and become the next big thing. Also, another case of Wall Street cozying to crypto firms saw a meeting between Goldman Sachs CEO David Solomon and FTX CEO Sam Bankman-Fried, which included an offer from Solomon to help FTX with future funding rounds and regulatory compliance. So we are seeing Wall Street, we are seeing all these big financial institutions and institutional investors cozying up with crypto firms, cozying up with blockchain firms, and basically they are embracing this change that is being bestowed upon the world instead of rejecting it, because they know that it's the future. So Grayscale Investments is to list its first ETF in Europe, offering investors exposure to companies in finance, technology, and digital assets. So this ETF will list on the London Stock Exchange, the Deutsche Börse, and the Borsa Italiana, and it obviously will be available to traders across the European Union. What they want to do is they want to give investors exposure to cryptocurrency and to blockchain technology indirectly, because this fund will be invested in companies that have interests in this technology and also in crypto, let's say crypto exchanges, crypto wallet providers, and just any companies that are involved with cryptocurrencies. And it offers so all in all, it offers a way for investors to actually get exposure to cryptocurrencies without actually purchasing any cryptocurrencies, because these companies' performances are indirectly linked to the crypto market. And Grayscale already has a Grayscale Bitcoin Trust in the United States, and they want to convert that into a spot Bitcoin ETF, because remember, in the US, there's still no spot Bitcoin ETF. All of them are futures Bitcoin ETFs. However, a lot of companies have been facing trouble to get approval for spot Bitcoin ETFs, because the SEC is basically saying that it doesn't offer enough protection to investors. But there is a caveat now that the latest Bitcoin ETF was approved by the 1933 investment law that basically opens up the floor for spot Bitcoin ETFs to be approved, because the level of protections offered for both are the same under that specific law. And it's just a matter of seeing whether this Bitcoin spot ETF gets approved in the US. But for now, they want to enter the European markets because it already has 70 exchange traded products, and the total value is 7 billion. So this is a massive opportunity for Grayscale. There's a $7 billion market that's growing every day, and if they get in quite early, I think that they can become leaders in crypto ETF trading, not only in the US, but globally as well. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.